Taking a look at today's interest rate markets, let's look at the 10-year note futures as they're moving higher today. 10-year note futures reclaimed the 108 handle yesterday, and today we're looking at that June future moving into the lower middle of the 108 handle, 108 spot 11. So continuing to maintain some upward price action here for a second session. And with today's price action, we are now looking at 3-week highs for the 10-year note futures. And driving factors today, a couple things. I think primarily digestion of the Fed message yesterday, as it was viewed as not as hawkish as what the market had anticipated. The Fed chairman did leave open the possibility of rate cuts later this year, and really ruled out, at least at this point, any indication that they're thinking about raising rates. So at least he did say at this point in time that there's no indication or no discussion of that possibility, and didn't rule out the possibility of potential cuts later in the year based on the data. And I think that that's, as it works its way through the market, having an impact. We're seeing the equity markets rebounding nicely today after the big selling pressure late in the day yesterday. Treasury markets moving higher for the most part across various durations, and we're seeing a dollar under some pressure here today. So shifting dynamic here as the markets process the Fed message. Now, the other part I think is influencing the markets is the data points. Now, this morning we had unit labor costs come in higher than anticipated, and that certainly created initially some selling pressure on the release of those data points this morning. But then as we moved through the session, strength was able to reestablish itself in the markets, in the Treasury markets and the 10-year note futures, and that propelled us back up towards the highs, and we're just off those intraday highs here as we move through the afternoon. Now tomorrow, non-farm payrolls will be another driving factor, and I think that the markets, you're seeing some repositioning ahead of that based on some of the data points that we've had in the last couple of days, plus the Fed message. Yields. 10-year yield is down 2 basis points today to 457 basis points. We did see it over the 460 basis point level early today, particularly after the release of the data early this morning showing unit labor cost higher than expected. So that pushed it up closer to 464 basis points, but now we're seeing it coming back down and actually lower on the session, as I pointed out. And with today's yields moving down to this 457 basis point level, these are the lowest yields for the 10-year in basically the last 3 weeks. And pretty much across the board, slightly lower yields in the various durations. Not so much on the short end of the curve, but the back end of the curve, we're seeing yields down anywhere from 2 to 4 basis points in today's price action as we await the much anticipated non-farm payrolls tomorrow on the heels of the Fed announcement yesterday.